Welcome. In this video is Xcn coin skyrocketing time is approaching. We will analyze it. Don't forget to subscribe, like, and please watch to the end to understand. The chart shows a very dominant and broad downtrend structure that has been in place for a long time. This trend line in particular has caused the price to make lower highs and lower lows for a long time, creating psychological pressure on traders over time. Such long-term downtrends are often regarded in technical analysis as a clear indication of the prevailing selling bias in the market. However, on closer inspection, this structure is gradually weakening and the price is now touching this trend line more frequently. This could signal the approach of a potential trend breakout. Breaking such major downtrends is often quite critical. This is because this trend line has a direct impact not only on the course of the price, but also on investor psychology and market perception. In the long run, a price below this trend line will cause investors to be cautious and often skeptical of uptrends. However, if the price breaks this structure, there could be a strong positive sentiment in the market, and buyers may start to open positions with more confidence. This could pave the way for a permanent upward reversal. Currently, the price is moving close to this major falling trend line. This area is technically working as resistance, and the price has often reacted downwards when it has hit this level in the past. This time, however, the approach may be different from past attempts. This is because the price is now touching this line much more frequently, and this could signal a weakening of the resistance. Also, with the possible increase in volume, breaking through this zone could bring a much stronger breakout compared to previous attempts. However, another important fact known in technical analysis is this: the bigger the break, the bigger the impact. This means that a breakout of this major downtrend could spark not only a short-term rally, but also a strong medium to long-term price move. Such breakouts are often considered one of the most important signals that the market is changing direction. If the price manages to break above this falling trend line, it will boost investor confidence. This is because such a breakout indicates that the market is no longer under selling pressure and is preparing to enter a new bullish period. Moreover, after this breakout, the bullish scenario could be further strengthened if the price tests levels that previously worked as resistance and confirms them as support. This is described by the break, retest, continue pattern in technical analysis and is a very reliable structure. Breaking this major downtrend is also considered an important breakout moment in trading strategies based on technical analysis. This is because such structures are also followed by professional traders, especially algorithmic traders, and high volumes of position openings can be seen at the moment of the breakout. This helps the price to gain strong momentum in a short time. This means not only that a line on the chart is crossed, but also that millions of dollars of trading decisions are changed. Especially in the market, which has been under the pressure of this downtrend for a long time, it is inevitable that the price will tend to liberate after such a breakout. This liberation may enable the price to move towards the previous peak levels. It also prepares the ground for it to create new highs. The most important detail to be considered at this point is that the breakout is healthy and supported by volume, because breakouts that are only seen as a wick can mislead investors and cause short-term traps. However, a steady rise with volume reveals that this trend line has actually been crossed. In summary, this major long-term downtrend is still not clearly broken. However, the price is very close to this structure and the chances of an upside breakout are increasing every day. If this breakout occurs, it will open up new opportunities for not only short-term, but also medium and long-term investors. This downtrend in the current structure is also a turning point. Therefore, if the price breaks above this trend line, it could be an important development that could change the whole balance in the market. But we can't decide the analysis only by trends. Let's look at other metrics. Stay tuned. Noteworthy on the chart are the Fibonacci retracement levels, which are based on the movement of the price from the bottom to the top. This type of analysis is often preferred in technical analysis because it is believed that markets tend to correct at certain rates, and that these rates are particularly reflective of investor psychology. As a result of the measurement made in this context, it is seen that the price is currently experiencing difficulties, especially around the 0.382 Fibonacci level. This level is one of the important retracement ratios of the Fibonacci sequence and can often work as a strong resistance or support. In the current situation, the price is struggling to break through the 0.382 level, although it has gained some momentum in its uptrend from the bottom. It is not surprising that this area works as such a strong resistance, as a significant portion of traders may consider this level as a selling zone. Profit realizations, especially after the rise, can cause the price to retreat at this level. However, the important thing is that the fact that the price has not broken this level does not mean that it cannot cross this level permanently. On the contrary, the consolidation here could mean that the price is gathering energy for a stronger rise. The failure of the price to break the 0,382 level may have created a perception of resistance in the short term, but there is a deeper reality to be considered here. Technical analysis often shows that these levels are not easily breached on first contacts. This means that it is very common for the price to test this level several times and then break through this level with a voluminous breakout. Indeed, as we have seen many times in previous charts, important resistances are usually overcome after a few attempts and then start to work as support. If the price manages to break through this 0,382 level, we could see a significant increase in investor confidence. This is because this area is both a psychological and technical barrier. In the current outlook, the fact that the price is constantly approaching this level and experiencing shorter pullbacks each time may actually indicate that the resistance zone is weakening. Repeated contact with the resistance area and the gradually diminishing influence of sellers are important technical signals indicating that the probability of a breakout is increasing. In addition, squeezes near such levels often signal a big price move. So this current outlook could actually mean that an upside breakout could be in the offing. Breaching such resistance areas creates not only a technical but also a psychological transformation. Because while many investors hesitate at these levels, they become more willing to take positions after the breakout. This leads to increased liquidity in the market and faster price appreciation. Breaking technical structures that are followed by millions of traders, such as Fibonacci levels, also leads to the activation of automated trading algorithms, which can accelerate the upside. In addition, after a breakout from this level, it is a very healthy technical outlook for the price to retreat and test the same level. That is, to make a breakout retest movement in the classical sense. The upside after this move has the potential to be much stronger and more permanent. From this point of view, crossing the 0,382 level would not only be a resistance breakout, but also an important signal of a change of direction in the big picture and a shift in market momentum to bullish. Looking at the RSI indicator, there is a strong rising trend line with a noticeable upward slope. This trend line symbolizes the recent positive momentum of the RSI and can be considered as one of the important signals that buyers are gaining control over the market. In particular, such ascending trend lines are often the result of the RSI matching up with price lows, often signaling the start of a new bullish wave. Currently, the RSI is very close to this important rising trend line. This approach suggests that the market has reached a decision point in the short term. However, based on the current technical structure, the chances of an upside reaction from this rising trend line are quite high. This is because this trend line has worked many times in the past, and the RSI has bounced upwards after each contact. This confirms that the trend line works as a strong technical support level. If the RSI bounces off this area, it would be possible to say that momentum is regaining strength and the buy side is becoming dominant again. This kind of reaction is directly reflected in price movements and often leads to sudden upward movements on the charts. This is because leading indicators such as the RSI can signal a change in direction before the price action. For this reason, the current position of the RSI can be a very important opportunity zone for investors. Yes, friends, I hope you liked the video. If you subscribe to my channel and like the video, more videos will be coming. Be careful in your investments, analyze the risks correctly, and always take strategic steps. I will be with you with different analyses, investment opportunities, and technical information in my videos. I wish you all a lot of profit. See you soon.